Right, Neal. Okay, so today we have another interesting guest. So last week we had Sam Hewitson, who's a good chum, and we now have the other good chum in our little trio WhatsApp group, and he's called Neal Gurney, and I've known Neal for probably 10 years now or so. So Neal, who are you and what do you do?
I'm a 30-something-year-old that lives in Norwich also, and I own post offices is the main business, with the shops inside them and the properties mainly is what I do. I always struggle to say what I do when people ask that. I know loads of self-employed people have that trouble. It's a common conversation. But yeah, I don't work in the post offices, but I acquire them and make sure they're ran well and profitably, I suppose.
Best intro ever. So again, like Sam, Neal is very modest, so I'm going to have to really try and extract all the info from him because he won't talk as himself up like he should. So okay, let's start from the beginning. So you own shitloads of post offices. I mean, how did you get started in post offices?
My dad bought one locally. He was my dad has always been self-employed, not as a shopkeeper or anything like that. He was a photographer by trade, and then he got into property in the late 90s, and a property near us came up for sale. It was like a commercial residential mix, and the commercial part was a post office, and he bought it for the property, but needed to staff it. One of the staff members was leaving, so I was only 18 I think at the time, didn't know what I wanted to do. I was working in the leisure industry, and he said, look, do you want to go and work in there? So I did, and got trained up to do the job and whatnot, and then after I'd been there 3 or 4 years, he said, look, do you want to buy the business off of me, because it makes more sense. So I did, no money down, and just paid him over 10 years out of the sort of excess profit of the business, and went from there. That I was then sort of in control of the business for 7 or 8 years into my mid-20s, and then that was at that point that I had the sort of, I started reading sort of the business books and stuff like that, and really getting into it, and realised that I can either stay as working in a shop and earning reasonable money, or I can try and actually do the same thing again with some other branches, and and get them staffed and grow my income and free up my time that way. So that's kind of where it began, really.
Okay. And so you learned the ropes by basically working in that first shop for ages, and I guess that's where we first met.
Yeah, it was. Yeah, when you had the bullion business, and you were you were one of our best customers, mate. Sending all of the bullion, and then it was on a holiday. I read Rich Dad Poor Dad,
I remember that.
And he was talking about learning and going to seminars and things like that. That was kind of before a lot of the online social media courses and stuff. And I remember you used to run seminars and stuff about gold and silver and bullion and stuff like that, and I mentioned it to you. I actually thought you were a lot older than you were.
Wait, how old are you now?
I said to you, I'm 36 now.
Okay, yeah, I thought you were older. Yeah, I'm 35, so yeah.
Yeah, I thought you were older than me. Maybe it's just the way you dress. Anyway, and I sparked up a conversation. I intentionally sparked up a conversation with you because I was sort of thinking that I need to, expand my knowledge into that kind of world. And one of the first things you said to me was, the first thing you need to do is read Rich Dad Poor Dad. And I said, look, I literally have just come back from holiday and read it. That's why I'm all over this now. And then we sparked up a good friendship and shared lots of learning experiences through our years, haven't we?
Nice.
But I forgot what your original question was now, but that's where we met, wasn't it?
Yeah. Okay, so let's get into like people. I mean, how many post offices do you have right now? Hello, can you hear me, mate?
Hello, yeah, can you hear you? Sorry.
Yeah. So how many post offices do you have right now?
I've got 6 currently.
6. So So I've always been for a long time I was always confused, and I think anyone listening to this right now going, wait a minute, he has 6 post offices. Like, how does it work? Because I originally thought the post office was like a government thing. So how do you own a post office?
Yeah, they're just nowadays they're just like a franchise, effectively, and every area should have an allocation of post offices in the area. They are, and you operate it. Every transaction that you undertake for the post office, you get a commission for. So at the end of the month, they send you a list of all the transactions that you've done for them, and pay you for those. And then you've got your own. Most people have their own kind of separate retail offering alongside the post office counter. So, whether it's a convenience store or a stationery and greetings cards and whatnot. So that's the sort of second income of the business, really. So yeah, you get the post office income, which is great because the company that's paying you is a government-owned company, so they're never going to not pay you, and they're always going to realistically they're always going to pay you reasonably fairly, because there's a lot of pressure on them to do that. Yeah. So obviously there's a lot of other relationships around that, Royal Mail, which is a separate company, and stuff like that. But that's how it works.
So,
really,
do you have to pay Royal Mail anything? Like, normally when you have a franchise, if I was to buy a Subway franchise, I'd have to pay a percentage of my sales to the franchisor. I mean, is it the same with the post office?
No, not really. The only sort of, obviously you would buy the business, you would buy the franchise off of somebody, because they're not really creating any more post offices in any areas. So if one is closed down in an area, then obviously that's there for the taking. But you don't really have to pay them a fee as such, because they're paying you. They're paying you. You're not banking all of the transactions that we do for the post office. So say somebody comes in to tax a car, for example. I'm not getting the, whatever it is, £180 that I've just taken from the customer. That doesn't go into my bank account. That's all. I'm doing that on behalf of post office. So, that's
okay.
How it works, effectively.
And so, yeah, because when I think about you in the post offices, I feel like you're just doing, like, playing the Monopoly game. Like, you can buy all the utility companies or the train stations. You're basically buying up all the post offices in your area. So, again, from like, what are the numbers like? So, what is the average? I mean, obviously, don't share too personal information if you don't want to. But, like, what's the average, I guess, revenue per year per post office?
Well, I mean, it can vary with post offices, but the ones that I've got, I try and get the kind of main ones in an area, so busy ones. I don't want small one-man band village shops, because it doesn't generate enough revenue to have it fully staffed and pay the overheads. So there's only I've got a criteria, if you like, that would make it work. So generally, I'm looking for post offices with where the post office turnover, so the income that I'm going to receive from the post office transactions, is around 100,000 a year. And then looking for it to be in a premises or looking for premises where I know that the retail side of the other half of the turnover will come from retail, and I'm looking for the retail normally to be about the same sort of number, anywhere between sort of 70,000 and another 100,000. So generally, looking for an overall turnover of about 200k per branch.
Nice. Yeah, so it's like 60% from post office stuff, 40% from retail. And so what do you do to maximize the retail in a shop then? Is it, I've noticed in some of your shops you don't do that much food other than the Acorn one. Like what's the thinking behind that?
Yeah, well, a lot of it is just trying to keep things as simple as I can, because the staff, I'm trying to maximise the staff really as best I can, rather than having to pay for, we have like 3 members of staff who deal with the post office transactions, and rather than having then to pay another 2 or 3 staff members to control the retail side of things. So
got it.
And I stick to what I really, I stick to what I know. I've never done the whole newspapers, tobacco, alcohol kind of thing, because, well, yeah, it's just a price war with other places, and the margins are quite small. There's a shelf life on it, and if I wanted to go down that, like say newspapers is a prime example. The hours and stuff with that is crazy, and I just don't want I tend to not want the grief with the finding staff all of the time. So yeah. I'm just trying to keep it. I mean, it was a carbon copy. What I was doing at my first branch was working really well, and I got it quite sort of automated, if you like. Got some decent systems in place and processes in place. A lot of that was helped by post office, because they're providing a lot of those systems and stuff already. So it's just like fine tuning the retail offering and fine tuning the process of the customer journey, if you want to call it that. And then going, right, that's what I know, that's working well, let's just do it in another branch. I have thought about going further into other sides of retail and stuff, but every time I've dipped my toe and tried it, it's just not been worth it. So I just stick to what I know, which is probably advice that I would give a lot of people. Not to say that you definitely should come out of your comfort zone and do new things, but if it's working well, then just keep it going, was my view.
Nice. Yeah, I completely agree. I'm just going to have to quickly pause something here, pause the interview for a second, just to explain something. Those on Facebook, hey folks, Facebook are really conniving. So basically, whenever I post something a bit risque or a bit controversial, Facebook throttles my reach. So I'm getting feedback here. So I posted something controversial. Whoa, Neal, is that your background a bit noisy?
Yeah, sorry, I just had a delivery.
Fair enough. Yeah, so basically what happened yesterday, I posted something on Facebook a bit controversial, and Facebook have throttled me. And so for the first sort of 10 minutes of this live chat, Facebook basically, I was running a Facebook Live to myself, and they throttled the privacy, so I had to click a whole bunch of different settings, and now it's public. So yeah, we've now so sorry, Neal, for the first 10 minutes we had 0 viewers, or other than those in Clubhouse. So Eva, Tom, Sam and Fame were here. So for the people here on Facebook now, just a quick recap. We're chatting with an old chum of mine called Neal Gurney, and he's basically doing the Monopoly. He's playing Monopoly, but with post offices. So he's going around acquiring. He's got 6 post offices now in his local area, and it's a really cool franchise, because the government basically won't let the Royal Mail go bust, and so he gets, I guess, 60% of his revenue from post office type shizzle, and 40% of his revenue is from retail, as in selling Christmas cards and stuff like that in the shop. So that's basically all you've missed. So apologies for that. I am recording this, so the actual recording, Neal will cover it or catch everything. So don't worry. Yeah. So what Neal just said is basically he sticks to what he knows in terms of the retail, and the reason he sticks with I guess the non-perishable goods is that he's maximising his post office staff instead of having to then hire other retail staff, etc. I think that's recapped everything in a nutshell. Okay, so what are your plans moving forward, Neal? No, in fact, ignore that question. How do you actually find a new post office to buy? That was one of the questions I was wondering.
Well, now I get approached now from post office if they know that one is going to be closing or something like that, or they want to. There are still some post offices out there that are directly owned and managed and staffed by post office, and they're looking to franchise their whole network. There's only a few of those ones left, but basically, post office will contact me as I'm a preferred operator in there, especially in East Anglia. So yeah, they'll contact me and say that this has come up. If you would be interested in you applying for it if you fancy it. And like I said, if it kind of ticks the right boxes in terms of revenue and location, then then I'll go for it. So that's really how I do look for them as well, but the last 3 or 4, that's how they've come about, really.
Nice. And as I said earlier, Neal is very modest, but he's 36 years old, and he's got himself into the position where he's got all these post offices that don't really need him. They're running themselves, and obviously the sales and profits are coming through from each branch. So yeah, what are the plans moving forward? Because you're extremely time rich, which I'm very envious of. Are you going to try and convert that time into other things, or what are the plans?
Well, that's that is the thing, isn't it? I had a hard slog, I suppose, of doing this for 5, 6, 8 years, and I was getting more and more time to myself, and I'd still get sucked into the business now and again, but that's just me, me kind of bringing myself in mainly because I get a bit bored, I suppose. I know that it's hard. I'm time rich, which is great, and that's the goal for everybody. A lot of people's goal is to have your time and do with it whatever, do whatever you want when you want to, which is great. But unless you've got a clear idea of what it is that you want to do with your time, then it's difficult, and that's the position that I'm in now. I've got the time. I spend a lot of time with. I've got a young family, so I spend a lot of time with them, which is great. But besides that, I think what I spend my time doing now is trying to find ways and educate myself on different ways to invest the surplus profits that the business generates, which asset allocation, I suppose. It was Warren Buffett's. That was his main thing, wasn't it? Just acquiring assets that bring in revenue, so then you can allocate that excess revenue elsewhere. So it's going back to that Rich Dad Poor Dad book that first spurred me on. It's kind of getting out of the B category, the business owner category, and firmly establishing yourself in the I category, the investor category, because that's where real residual income comes from. Whereas still as a business owner, it's not entirely residual, because you're still having to put some work and effort in. So I suppose that's where my time. A lot of reading and watching videos on different asset classes and stuff. So, but overall, the main goal is to just enjoy my time as much as I can, and remember what life is about. That is not about working and not about making money to buy, crap stuff that people don't really care about. It's trying to do stuff that I enjoy, find things that I enjoy with the people that I love, basically, and do more of that.
Golf with me and Sam.
Well, I said people that I love. So, yeah.
Sam's here on the clubhouse, by the way. He can hear that.
Playing golf, having the time to do those things, play with the family, go on holidays, meet new people, and I enjoy music, so I can spend more time sort of playing the guitar and things like that. Really, so nice. But in terms of work-related goals, it's very sad, but I suppose I haven't really got any. If something falls on my lap, or crops up, then I'm trying to always make sure I'm in a position to jump on it. Having, again, Warren Buffett calls it walking around money, doesn't he? So having cash on the hip to make sure that I can take advantage of any opportunities that arise, but also trying not to get FOMO and jumping in things just because,
Mate, that's the
answer to that.
Yeah, and it's super refreshing, because everything you see online, YouTube, it's all about hustle. You need to, get so much money and all that sort of stuff, and it is exhausting, because I guess it is very exhausting. Whereas on the flip side, there's you, who's cash rich, time rich, and I guess you don't have to have any crazy life plans or goals, and I think you've already nailed life at such an early age, and it's inspiring, mate. It really is. So.
Oh, that's very nice. That's kind of you. Yeah. Thank you.
So, okay, I'm obsessed with business nuggets and errors and whatever. What are the biggest hiccups that you've made in business, and the subsequent learning points from it all?
One of them. Well, I suppose there's a few. Biggest learning points have been staffing to a certain extent. I know Sam said it, I think, the other week, but it's so true. One, making sure that you're not busying yourself with tasks that that somebody else could be getting on with. I done that for way too long. I was, which one of them was working in the branches, I spent too long working in the business and not working on it. And when I came to realise that was a big shift in the way things developed. So trying to remove yourself as such from the day-to-day of the business, that was a massive nugget for me. As soon as that happened, you can feel that you're not getting much stuff done that way, but actually, really, you are, because you're just not busying yourself with tasks that you can really hire somebody else to do, like bookkeeping and cleaning and just general stuff like that most people can do, and they'll do it for you happily, and they'll do it reasonably cheaply. So have a value of yourself. How much am I worth as such to this business? And where is that value? That it doesn't lie in cleaning the floors, because that's not going to get me where I want to go. One of the other, I suppose, another big learning point was when I bought one branch, which was it was a good deal. It was the guys wanted like $100,000 or something for the business, which was a fair price in my view. And I said, look, I'll pay you that, but it'll be no money down, and I'll pay you over 5 years, which was, I was paying them out of the profits of the business, so it was going to be profitable from day one. Yeah. But with hindsight, I still paid too much, but at the time I was thinking, great, that's a good deal. Yeah, I'm going to take, after I've paid, every year I'll pay them off. I'll have that branch will generate, I don't know, 50 grand profit. And I've paid nothing for it. So it's, the ROI was massive. But I suppose it was after 6 months or so, I thought I didn't need to pay this much. I didn't need to pay this much for the business, even though it was a great deal. I know, looking back, I could have said to them any figure because they had no choice, you know. So one of those nuggets, I suppose, would be that look how motivated the seller is and your value to them. And I was so valuable to them because they had no other option. They had nobody in the area that was going to take that business on, and so they were looking at either just, you know, shutting up the business and winding it down, and, you know, they were coming up to retirement age, so if they couldn't find anybody to buy it, then they would just you know, they would lock up and they've had their time, you know.
Fair on.
So, you know, and they, like I say, they had no other option. So I could have hammered them a lot less on price, but yeah, I suppose because it looked a good deal to me at the time, I went with it. But that was one thing, you know, just because it looks good doesn't mean it can't get better.
Yeah, true. I guess on the far end of that, you can then enter in the point where, like, one of my rules is I always go for happy, and at the time you always do the thing that you think is best for you and whatever at the time. And so at the time, mate, you were happy with the deal, they were happy with the deal, and so yeah, obviously hindsight's beautiful, but yeah, interesting. Yeah, and it's not good to really screw people over on like prices and deals and stuff. So yeah, there's a delicate balance.
Yeah, because I've still got a good relationship with them, which is nice. And I never, you know, people say, don't they, you know, be kind to the people on the way up, you know, because they'll help you out on the way down, or whatever the saying is. And I think that's always the thing, trying to always have some integrity. And I never want to, you know, I don't want to go to my grave, you know, thinking that I felt I screwed them over or anything like that. It's always got to be a win-win with any deal. You know, they're the best ones where you're both winning.
Yeah.
So yeah, like I say, hindsight is a wonderful thing, but you haven't got that at the time. So
fair enough. And so just going back a bit, when you identified that you needed to work on the business rather than in the business, and again, a lot of people say that, and I just want to go into sort of the details. So there you are in the business, or in lots of the businesses. What exactly did you do to remove yourself from the business? Now, I know the answer is staff, etc. But like, how many people did you get in to replace all of your, you know, to get you out of the business? What did you do?
Well, I found where I was spending most of my time was every branch that I had its own, you know, had its own staff, and it was working fine. But it was with staff, it was when you get those unforeseen things that really you should plan for, but I never did. You know, the maternity leave and the you know, sick leave. You know, people get sick, and obviously staff turnover. We're lucky that we don't have a very high staff turnover. So it was in those instances that I was getting dragged back into the business, and doing, you know, I was getting pulled on to working in the branches because they had no other staff. So after a while, I identified that I've got to get some kind of some other staff in place that will float around all of the branches and not just be tied to one. So yeah, I got 2 or 3 people on a different contract to then just float about and be and oversee the branches as a whole. And again, that was money well spent because they've been great. So they pretty much, like, you know, like an area manager as such, they oversee. So yeah, I mean, the answer is what you said. It was staff, but I identified where I was spending most of my time. And replaced it with the right people. And again, I know Sam touched on that last week about hiring the right people. When you get to a certain point, it's so valuable. It's worth paying to get the right people in place. Or if you spot the right thing in somebody, you know, invest in them and and show faith in them, because they'll shine. So yeah, the staff that work there and that operate it are way better at it than I am. So I now feel that my skills, or my knowledge is in allocating the capital, allocating excess profits in the business to then grow it. So that's the answer to that, I suppose.
Yeah. You've got some love here in the chat. Richard Watt says, "This guy is where I want to be." Gary Davies says, "Love this." And Aaron said, "This is the ultimate goal: work on the business instead of in the business. That's why I have 4 apprentices." Yeah. So okay.
That's the way.
Yeah. Okay. So earlier you said you need to stick with you're sticking with what you know, etc. So what's stopping you from moving? Like, obviously you've got 6 branches at the moment, and it's going great. What's stopping you from buying another 10 in a different area?
Yeah, this is the other thing. I've been offered a lot more in a lot other areas, and I have had that battle with myself to say, there's no reason why I can't have 80, 100 branches throughout the UK.
Oh, lost you there, mate. Oh no!
Oh, I've lost you.
Oh yeah. All I last heard was no reason I can't have another 100 branches, but I had that battle with myself. There's no reason why I can't, and I looked at it, and I would be offered them. There's plenty out there that post office would be happy for me to take over. The honest answer is, how much money do I need? For my lifestyle, or why was I doing it? Okay, I looked at it and said, well, what would that get me? Okay, they're a franchise, right? I'm not passionate about. It's not a business that I'm passionate about. I think when you've started a business from scratch, that you love, or it's in an area that you love, like say fitness or something like that you're really passionate about, or you've got a big end goal where you go, to a 10 million turnover, so I can sell it. I know that, okay, if I had 100 branches, I'm not going to be able to sell that anyway. Who am I? What would be the exit strategy then? How would I exit? I'd just be in control of a big company. And at the moment, I'm quite happy. Again, young family, want to spend the time with them. I don't want to be stressed out just because of money. I just want to get the balance right. And like you said, and I feel very content at the moment. I feel I've got the right amount of time. I can oversee the businesses. I'm taking some good money, and I'm just happy. And nice.
Again, if it's not broke, don't fix it. Although it's awesome to have goals, and I have got those goals. They're just probably less focused on money at the moment, I suppose.
Amazing. So refreshing. It's good. It really is good. So going back to the hiccups again, what other hiccups and subsequent learning points have you made? So obviously you've got a lot of staff experience and hiccups. Any other mistakes that you made in the past?
I would say not with not in business, not that spring to mind. Really, in terms of retail, I didn't realise how much suppliers. So the main part of our retail is greetings cards, and I was messing about for ages, organising stock and buying stock, and making systems to make that run more smoothly. And one of the big breakthroughs was I then found out that there was some decent suppliers out there that would literally just do all of that for you, because they want your business. And once I changed that, it freed up loads of my time. It made the retail offering loads better, because they were dealing with it all. That was one big breakthrough. But another learning nugget, sort of when I removed my myself from the business and started focusing on, okay, where should I allocate the money that the businesses are generating. I got into different, I was reinvesting in the business to sort of grow them and improve them and stuff like that. But I also got into trading, got into some various other investments. Some have been great, some didn't work out, but it's all that side of things has all been a learning curve. And I know I spoke to you a few weeks back and said that I feel in terms of that aspect, investing, I feel I'm definitely more knowledgeable than, say, my father is, and a lot of people wouldn't have had those experiences until they're in their 50s or 60s about bad investments and stuff like that. Whereas I feel I've had those bad investments that really sting, and at the time it looks like a no-brainer, and you get involved in it. But then 5 years down the line, again, hindsight, you realise that it sounded too good to be true, and it was. But like I say, most people don't have that experience until they're in their 50s and 60s. So I'm grateful that I've had that at this age. So that was probably one nugget, but not necessarily business related, but certainly.
And can you spill the beans on any bad investments? And obviously, what you learned from doing that bad investment?
Well, one, I chucked. I found out loads about a company that was going public.
I know.
I loved them. Because I got very close to the the heart of it, of what the organisation, of what the company was, and I basically got sold to. They sold me on the upside of this business now going public. So when they went public, I went big on buying loads of shares, and really they went public. They were a tiny company, a puny company. They went. They listed on the London Stock Exchange. They were like, I don't know what it was, 20 million market cap, which is puny. But I went big and chucked. At the time, it was a lot of money to me. I chucked 20 grand at them at those shares, because I thought I was only really looking at the upside, and ultimately it went to nothing. It literally they just tumbled, and I could have cashed out and sold at loads of different points. Suddenly that 20 grand was 15, then it was 10, then it was 5, and then it was 1. Why didn't I sell? Why didn't I sell at when it was 15 or 10? Because I was holding on to hope and stuff, and that's that was a big learning point. But now I've earned that money back easily in other trades and other investments. So win some and you lose some. So but you learn, as long as you learn from your losers. I think that's the biggest. So it was a lesson that I remember. A costly lesson at that, but it was still a lesson.
Yeah. And you're not the only one, because I got stung on that same investment as well, and so did so many others. Loads of very switched on people got stung there as well. So it's really hard. I mean, fine-tuning that bullshit detector and whatnot is something that takes, I think, 10, 20 years, really. So
yeah.
So what else are you investing in at the moment? What's on your radar? What? Yeah. On
my radar, or in my
both.
One thing that's always been a staple is property. One thing with the post offices, I've always looked to buy the premises that they operate from. That I've got commercial and residential property, which is great. It's a slow burner. It's a slow, hopefully predictable asset class. No massive gains or massive future potential, but it's holding money in an asset that will hopefully at least rise with inflation. And then equities, so different different equities. Especially through COVID, I went heavy when there was, all markets dipped. But I was buying not randomly. I was buying travel companies and stuff, which was at the time very, very worrying. But they've done well. Not to say that it will always continue. It will continue that way, but I think again, the age has a massive impact on that. I'm at the age. I'm still young. I'm at the age where I can tie up a lot of my wealth in the higher risk, higher reward asset classes, and if they go bad, I've got time on my side to make good and make that back. Whereas people who are possibly in their 60s and 70s, they want to preserve their wealth because they're now going to be they're at the age where they're needing they're needing it. They haven't got the years ahead of them to make good any losses. So I'm trying to just balance that between being conservative and having some stable, reasonably stable investments, but also remembering that I can afford to be risky because I've got time on my side. And as you get old,
just lost you there. Come on. He'll rejoin. Come on. I think it's my internet actually. Neil? Sorry, lost you again there. Sorry, mate.
I'm back.
Hey. Last 10 seconds.
Where I cut off. I was just saying, as you get older, having less of your money tied up in riskier assets. But as you're younger, if you're in your 20s, for example, then get stuck into some cryptos and equities and the riskier, higher reward investments. If they go bad, hey, you've got time to make that back. It will sting a bit, but you've got time on your side to make it back. So that's what I'm in at the moment. Cryptos, equities, property, and I've got I've got some cash on the hip as well for if any
nice.
Any other businesses sort of pop up that I'm interested in, or opportunities, for example.
And let's say a business opportunity pops up. Do you have a preset criteria that you're looking for, like certain amount of staff, revenue, or anything? Like, do you have an investment criteria for businesses?
Not really. No. I do if it's in the area that I'm in at the moment, with retail and whatnot, or bricks and mortar retail, I would say. But probably one of my main, if something was going to crop up now, I would want to see a clear exit. How I would be looking at how is this business going to grow, and who is going to buy it. That would be the sort of businesses that I would be interested in now. Ones that you can exit and sell. So either you get bought by a bigger company that wants to sort of take you out, or point where you can list it. So mainly a business that's got a clear exit to it.
Nice. And I think that clarifies or reiterates a point I made, I think, last week sometime, where when you're buying into businesses or investing into businesses, you really do not want to be a sandbag. Being a sandbag absolutely sucks. And what a sandbag is where you've bought a chunk of a company or invested heavily into a company, and you don't get any cash flow, so no dividends, and the business isn't selling, and you probably don't get any voting rights, so you can't really control the direction of what the company is doing. So basically all that's happening is you've just given a whole bunch of money to a company and you're sat there, can't do shit. And I've been a sandbag, and I am a sandbag in a whole bunch of different businesses at the moment, and it absolutely sucks. So you're spot on there, Neil. You really need to know if they're going to exit or they're going to pay divvies, etc. It's a very important point, folks. So nice one. I think, mate, you are I guess a shining light and epitome of you have won life, as in you've won. Because you're super happy, super content, and ultimately that's what everyone is striving for. And yeah, you don't need to be a billionaire to be happy, or you don't need to be or whatever. And I think hopefully that's come through today in this chat. So those on Clubhouse or on Facebook, do you have any questions for Neal? Put your hand up on Clubhouse if you want to speak, or on Facebook, please pop them in the chat box. And whilst you're doing that, we just had a bit of a tangent question. So Dean has asked, can you share your thoughts on the up-and-coming Deliveroo IPO? So I've got a quick answer for that. So and my answer is actually in the form of a bit of homework for yourself, Dean. So have a look at all of the household brand names tech household brand names that have IPO'd over the last 5 years. And what you'll find when you look at the NASDAQ and you look at Facebook, Google, Netflix, Uber, all of these sort of tech IPOs, what tends to happen is that there's something like an 80 to 90% probability that they will halve in share price within the first year, most likely within the first 6 months. So typically with a tech IPO, I wouldn't buy it, or it will surge a little bit on the IPO hype, and then it will then tank 50%, at least 50%. So if you are wanting to buy in, then yeah, maybe buy in on the day and then try and sell within that week or within the day once it surges up a little bit, and then exit, and then wait for that 50% pullback. So for example, I'm not interested in Deliveroo. I'm interested in Starlink. And Starlink is SpaceX internet company, and they are likely to IPO that over the next couple of years. So I am personally aiming to own shares in that for the IPO, and hopefully if you're a Tesla holder you get sort of first dibs, and then I'll be selling on the surge and then waiting for the dip. And also you have the other thing to, again, more homework when you're looking at these tech IPOs is, are they cash positive? So a lot of these IPOs, they're not cash positive. They're bleeding money, and one of the reasons they're IPOing is to literally get their grubby hands on more cash to extend their runway. And so if they are a bleeding company and they're IPOing, there's a higher probability that they will do that halving. Whereas the thing with Starlink, they're going to be cash positive, and insanely profitable by the time they IPO. So they may be the exception, and they may not dump. So, I mean, do you have any thoughts on that, Neal? Or
yeah, I was going to ask you a question.
Yeah, go for it.
About you could say I forget the term you just used, but like for Tesla was a company that was cash negative for how long, and Amazon as well.
All of its life, basically.
Yeah, but they, look what's happened to Tesla shares in the last, year. So I suppose it's not always the way, but to try and pick those out of the so many companies that aren't gonna skyrocket like that is tough. So you've answered that well, I reckon.
Oh, thank you. Okay, so no questions on the Facebook. Any? So we've got two Sams here on Clubhouse. Any questions for Neal or before we wrap this up? I think that's everything. Unless there's anything else you want to share, like any final hindsight tips, anything?
No, not really. No, I think I've said what my views on how to do things. So no, it's been good to talk.
Nice. Yeah, mate, it's much appreciated. So thank you very much. Cool. Rightio. We'll be back again tomorrow at 12 o'clock on Clubhouse and also on Facebook. And this is just my little heads up, folks. I will be transitioning away from Clubhouse. I'm just not a fan. And I'll also be transitioning away from Facebook Live. I want to start populating Zoom sessions so I can then start doodling and drawing pictures and stuff. So yeah, for the rest of this week we'll still be doing Clubhouse and Facebook Live, but eventually we'll be getting onto Zoom sessions. So yeah, everyone's saying thank you. Yeah, thanks Neal, very interested and inspiring, and I completely agree. And hurry up and get your ass over here so we can play golf, Neal, when we're allowed, obviously.
Yeah, I will.
Yeah.
All right, good to speak to you.
Cool. Have a good one, folks. Toodles. Love you all. Bye.
Bye.